Good morning, MMTs. It's a wonderful day. It's a Monday morning. Christmas has come and gone. Today's date, 12/27/2010, time 8:39 a.m. Pacific Standard Time. One of the things that we're taking a look at is the bull, the TQQ, the SQQ, relative to dollar price movements off of the low. So when we put a high in at 31.64, we came down off of those highs intraday to 31. At that time, when this was breaking higher, when we made the highs up here during that same time frame, the 148.87 was a sell short. So when Google broke higher here, when we were trading that off of the first hourly bottom, the time frame at that time, MMTs, let's take a look here. Let's click on the price action breakout bar. That time was let's make sure that it's updating. It was 27. So it was right before that first hour of trade came in. And we broke higher. Okay. At the very same time, when we hit the peak, this is when that bull had made its intraday highs over here. When we reversed here, we went down in price action. We teenied down in the SMF platform here. Okay. And we came off of the 31.00 low, and we're currently printing 32 by 35 on the bear. So when this print goes down, this is going to start to stabilize in the SMF market maker application. When this ticks down, Google will tick down as well. The correlation, the relationship between the bull here and the bull here move, the bull breakout off of that low before that short reversal. That's making money going down. As you can see, from the highs, you went down. Here's the actual bull run that we had. And I'm going to pull this one up, and I'm going to pull this one up right here so that you can see the time that the bull, let's get this right here. Let's overlay the two. So let's make sure that you can see where the breakouts both were. And it'll be right here in the same video. So let's just make sure that they overlay the two trends for you. I may have to smoothen up this chart a little bit. Let's downsize this one a little bit. MMTs. Okay, MMTs, here you go. When the bull made the intraday low here, which it did, this is the part of the trend, and we started coming up. Let me move this over. You can see the complete downtrend this morning. The bull gaps down, makes that low. We gap down over here on Google, and we make this low. When that low was put in on price action and we started to rally, it's the same time that Google rallied. When we started to fail over here, even though that we came up and we tested these highs, and we started to pull back over here, you can see the relationship with this reversal downtrend right here. And you can see that this last 36912 reversal move that has taken place is that's where we had the same reversal right here. So the correlation down, teeny down, and teeny down. Teeny up trade for new MMTs. The bull teenies up. This trade teenies up. And so do lots of other ones. When combining the two combination together and adding that into one trade management based on directional price movement within your SMF trading black box brain. No, I'm just kidding you, MMTs. You know what it really is. It's the SMF market maker platform. And basically there are mechanics that go on. And you can clearly see here, it's very important for you to understand where the breakouts were. And they're right here. You can see them clearly. Breakout and breakout. Reversal over here. This took some time, but that meant when Google was reversing during that time frame, it's a major. So the TQQ bull is part of that NASDAQ 100, and Google's a leader in there, and right along with Apple and the rest of them. So MMTs, once again, how do I apply the bull, the bear, relative to the high beta breakout stocks such as Apple, Google, Priceline, Netflix, Baidu? There are others in there, FFIV. The list is quite long. Some respond or some lag a little bit. Amazon's a good one. It's coming back off of its lows. So basically understanding bear and bull equals one of the two sides that you're taking. So the bull kind of can lag a little bit. It really doesn't matter because the leadership of Google selling off and Apple starting to drop a little bit, then I guarantee you this is drops too. And everything tells you in the brain. There isn't anything in here that doesn't tell you these movements. I'm just, for the new MMTs, I'm going to tell you that when it comes to trading options, I'm looking at a Google call that made the first intraday low at 29 and a quarter, and it went up. And some of the last prints up here, 350, somewhere up at 370. There was a yield on the 580 call option to be traded right along with this. So when I'm rallying here, and I'm rally here, I start to rally there, and I rally there, I can apply that 580 call wholesale entry down here, and I can sell that back for $1 yield on 20 contracts. That's $2,000 trade intraday. So, you know, the platforms work together in all areas of what we do. So it's very important that everyone understands how that process works, so that we'll keep that in the full perspective that we have to keep it in, as far as learning how to apply the options market, which we'll do a special on the options trading, deep in the money call, intraday wholesale market maker option, wholesale price entry, sell back to the public.